Very good evening to all of you. Warm welcome to the weekly Future Trend Analyzer, the product that we do, a webinar initiative that we do to update you on any macro/micro weekly trends that may be in the offing. Before we go there, market sometimes seems to be very simple. Small cap, market cap की धुलाई हो रही है तो धुलाई हो रही है वो खत्म हो जाएगा, right? When the market is down. So Sunil runs up के मैं एक वो लोगों को बाम देने के लिए let me just do a video and send it to them. Next day it is down. Oh my God, this is the end of the story. US market is opening. People are glued on to the US market, and if the US market is opening in or closes in negative, we will open in negative. So ये जो simplicity which eludes our normal wisdom and intelligence is like conjunctivitis. एक जना बोलता है 10 जनों को लग जाता है वो फिर 50 को लग जाता है and that keeps spreading around, right? But markets are not as simple. Markets are for long-term players, and if the short term has to be seen out there, let me ask Sunil a very educated question, which I'm sure he'll give me a very wise answer with full data embedded if he has data on such a simple question. Sunil bhai, markets were down in the US yesterday. We were up today across indices. Something like a small cap was up almost 1.8 to 2%. So why were we up when the markets were down in the US?
That's a very interesting and intelligent question actually. So market yesterday US was down and out, and there was a reason why US market was down. Today FII sold, Mohit. They were negative.
Right.
And yet market is positive. There are a couple of reasons why market is up today. Number one, definitely yesterday it seems that one of the Singapore hedge fund almost sold $1 billion on Indian equity market. Almost 7,000 crore का कुछ negative था कल, अगर आपको याद हो तो कल we covered that in our exclusive webinar only for the PMS members. And today there seems to be some short covering happening by the operators. Number one. Number two, those who are sitting on the sideline and on the fence, that if the valuation comes down, let us buy. And those investors came today and they started buying. If you remember yesterday, I gave one classic. Of course, not everyone would remember, but there was yesterday if you have attended my webinar, only those PMS customers attended, and we mentioned one particular company which we hold in our PMS substantially. It was down by 6% intraday. And by the time I'm talking about yesterday, by the time it closed in the green, Mohit.
Wow.
Okay, 6% and closed. And I did mention it yesterday also in the webinar कि कहीं ना कहीं वो value buying आ रही है, because investors are looking at those value and now say अभी इससे क्या, अभी risk reward क्या कम है, कि इससे तो कुछ अच्छा ही reward के favor में है, and they went and bought. Today, the follow-up buying happened. Having said that, I'm not saying everything is hunky-dory from here on. Of course, the nature of the market is a volatility, and volatility will continue. If you remember yesterday and day before yesterday also, I gave a level. What could be the potential downside Sensex can have, Nifty can have, mid cap can have, and small cap can have. And also yesterday in my webinar I said, where are we today? What is the potential downside? And what could be the level by December 2023 for Sensex and Nifty? And looking at based on that, what is the potential downside? What is the potential upside? And if you look at the risk reward, definitely was in the favor of reward. I must reiterate for the benefit of those who missed my last two webinars, we do expect, we are not in the same camp which believe that mid and small caps are expensive, they are in the bubble zone. We don't subscribe to that view. We will also not subscribe to the same view in the beginning of 2023, because if you go through our commentary in January 2023 and other people's commentary, they were extremely bearish on mid and small cap. We gone ahead and made a statement, this is the year for mid and small cap. 2023 is a year. And while everyone was bullish about banks, I'm happy to inform you that we were not. We were a little contra at that point of time. And when Mohit went on CNBC TV 18 also, he did mention that in his discussion with the anchor, And when I was looking at the YTD returns of Bank Nifty, it's in negative. While the market is positive YTD, the Bank Nifty is negative and NBFC is just up by 0.78% or so. This one. So Mohit, the main reason, just to summarize, I think one is that heavy selling that we saw yesterday, that is already over from the FII. Number one. Number two, value buying coming in at the lower level in the mid and small cap. And we do believe market should remain positive by December 2020. And we are not very far from that. So yes, there could be volatility, but undertone continues to remain extremely bullish.
Right. Thanks, Sunil. Before we start with the proceedings, and today we have some interesting lineup of topics that we'll discuss, and we'll move very fast. So, we'll not take much of your time on the weekend. We have one important announcement. Starting November, Markets Mojo is doing a complete facelift of the Mojo Professional Pack. There are new features that we are launching, which is for the first time in the last 8 years to a differentiated target audience. So we are coming out with some people who want to take excessive risk, their product. We are coming out with a product for people who want to take conservative calls, their product. We are looking at people who want to play a medium, moderate kind of a role, their product. We are also coming out with a product where you can look at potential gain over a 3 month, 6 month, 9 month kind of a short duration fundamental product. So there is a huge overstep that we are taking in the journey of Markets Mojo, which is going to be unrevealed to all of you in the next 1 week itself. We are ready with it. We are just working on the design and all. Now, as I had told and as I had mentioned in the last webinar as well, that the pricing of this product will be very different. In fact, the pricing that we are seeing for all of these combined products is 2 to 2.5x more than what the pricing of the product is today. So what it does is that it gives you an excellent opportunity to extend your packs today. If you've not extended, we are giving one of the lowest of the last 2 years offers that we have, which is 19,999 for 2 years plus 6 months free, which is a massive 47% discount. And this is not something which can be delayed anymore, primarily because you know that next week these list of products that are getting in, and Mojo Professional will become Mojo 1, which means the most premium pack will be closer to 60 to 70,000 rupees from on a 2 year basis rather than a 20,000. So this will be a 2.5 to a 3x price increase. I am pre-warning, this is a paid webinar for only the paid users of Markets Mojo, and this price is only available for the paid members of Markets Mojo, and this is only available on this particular webinar on the link that you see out there. So please make sure you use that link and don't miss this opportunity. Give yourself a Diwali gift, because we are doing a very big Diwali offering this year in terms of the new product lineups that we've got, which is something that I will unreveal to you in a special event next week. Now, moving on to the topics that we are going to cover, very interesting topics. One is, we have discussed about the equity markets rally. Typically, last week we were talking about what happens to equity markets during Diwali. We haven't spoken about what happens to gold from here on. So gold is one of the things that we will be covering today, our limited projections on gold. We would also be talking about one key thing that might wake you up a little, which is, we say that 82% of the large and the mid caps have underperformed the index in the mutual fund category. But does the investor also have any role to underperform their own performance? What can the investors do? What is the data that is telling us that where the investors are going wrong? And that is a very sleek set of data that we'll present to you today. Israel-Hamas impact fading on the crude oil prices. Where is the R word for us, which is where US, which is where is the recession word for US that we were talking about 3 months, 6 months back. We are going to talk about a very interesting, I think this is something that I have not seen in my career. I don't know if Sunil has seen in his career, but we are talking about comparing home loans, mortgage loans between US and India, which is something which is incredible. And then we've got a recap of the result season that we will cover, because we, as you know, we are in the result season. And where does India stand today in terms of inflation globally? Initially, when we used to talk about inflation versus globally, we used to hide our faces behind the desk, because we used to be a country where the inflation was at peak at all times. So there was nothing like it is going down, it was at peak at all times. But we will today compare some of that data. So this is a great future trend webinar that we're doing today. Stay tuned, and let me hand this over to Sunil to start the proceedings.
Thanks a lot, Mohit. And before I begin, my favorite slide, disclaimer. Please note that this webinar is just to enhance your understanding about the equity market, about the macros, and so on and so forth. This is not webinar to recommend any buy or sell. Please consult your financial advisor before buying or selling any company which you intend to buy. Don't take any decision based on this webinar. Remember, when you invest in the equity market, it carries higher amount of risk, and past performance is no indicator of future returns. So very quickly, should you buy gold? And that's a one question. And my wife always, yesterday over dinner also, my daughter was saying, Papa, su apa? And fortunately, post this webinar, I'm supposed to go and attend one jewelry show in St. Regis, which has been conducted by, I think, Bombay Times, and I've been invited for that. So it's 8 to 10. It's very close to our office. And the topic was, should you buy gold during Diwali time or not? So I'm going to present that. And Diwali, sometimes, people normally, Dhanteras is when we have seen the highest amount of gold being sold on that particular day. And so, should we at all buy? One is that definitely you have a religious belief, and that's why you buy it. So no one can challenge that, am I right? But logically, should you do that or not? From the investment point of view, should you do it or not? So I'll present some data to help you take a call on that. Sometime I distinctly recollect me and Mohit were going to Hyderabad, I think last year, maybe not same time, but maybe in the month of July or August, and we're discussing about should you buy gold or not. And I was saying it doesn't make a lot of sense to buy gold and silver at that point of time, because it was looking very, very promising. So does it really is the case or not? So should you buy, does it make sense to buy gold during Diwali other than the religious reason? To be honest with you, I also buy. So let me be very upfront and very clear cut about it. Now when I look at it, 1 year return, because Diwali this time is a little delayed. Why? Because of there is something called Adhik Mas which comes in the Hindu calendar, and it's up by 21%. Again repeat, Mohit, were you aware about that gold was up by 21% in 1 year? Okay. If you look at it, YTD, it's up by 10%. In other words, it outperformed the equity market. Having said that, one should never buy gold because your view on the gold is positive or negative. Okay, am I right? You should always do assets allocation of 10 to 15% to the gold. But having said that, I do believe picture abhi baki hai mere dost in the gold. Why? And I'll give you some interesting data why I believe the gold could again be another darling for the investors. If you look at 1 year, 3 years, 5 years returns of gold and equity, Sensex, that is almost same. But if you expand the 10 years period, I think Indian equity market did almost double what gold did it. But as I said, it's not because of the price view, just purely because of your assets allocation strategy. But why do I believe gold should do very well? And let me just give you some data. If you remember few webinars, the trend series, future trend series, I presented about how RBI is increasing gold as a percentage of forex reserves. So not only our forex reserve is going up, but within that, the gold as a percentage of total forex reserve is inching up. So I'll give you some data. Where do we stand? Despite we have increased it, where do we stand? So this is data about who owns, which central banks across the world owns the highest gold reserves. United States, 8,133 million tons. Where does the India stands? 800 tons, and that's increasing. China, which is almost 2.5 times of what we are owning, 2165 in Russia and so on and so forth. Now, if you look at it, Turkey is 471, but Turkey has been one of the highest seller of gold from its forex reserves purely because of inflation and to control they run on the currency. That's why they have been selling that. So we are the 9th largest owner of gold reserves. I have not included IMF. IMF is much higher than us, but IMF is not a country. That's why I have not included IMF in this number. We are the 9th largest, and very soon we could be the 8th or the 7th largest in the next couple of years. Now, have we done enough in terms of gold reserves? And I was looking at the data, I was surprised that Pakistan owns 30% of the forex reserves in gold. Pakistan, okay? We are only at 8.3. So if you look at this, Pakistan is 30%, we are only at 8.3. Even the Russia, which is not this one, is 25% of their this one, and so on and so forth. There is a huge scope that India will. Now, and this is my theory, personal theory, that US eventually will get downgraded, whether we like it or not. And due to that, there is a possibility that some of the people do not want to own currencies, forex reserves in dollar, and they would also think of what could be the alternate that we can do that, and gold could be the potential alternate to the dollar in terms of the putting the currency reserves in the gold. And that one reason I personally believe that gold should do well. And in fact, see, remember, China is not doing well. India has put a lot of curbs in terms of import of gold, and yet gold price went up by 21%. Now imagine China start doing very well because of stimulus and other things. China is one of the largest consumer of gold in the world, and then India is the second. If that happens, then what happens? What looks, there could be a sustained rally that can happen to the gold. Gold is anyways a commodity, and commodity has its own cycle. I think last 10 years or so, gold little struggled to move up. And then once it started moving up, it's moved up very significantly from 3,000 to 34,000. If you remember, just in 10 years, that's what happened. I think in 1999, by 2009 or so, the gold from 3,000 to 30,000 kind of stuff, it happened. So that's what can, something similar can happen. I'm not saying it's going to go up 10x or something in the next 10 years or so, but rally can come purely because of people the central banks may prefer to have more gold as compared to the US dollar. Now, the most common mistake mutual fund investors make, and especially equity side. And if I asked you what is your average, and this data I've taken from Prudent Corporate Advisory, which they came out with the numbers yesterday, and I've taken an investor presentation, I was surprised to know that almost 1/4 of the investors move out of equity mutual fund within a year. Within 2 years is almost 50%. Now, I don't understand. This is the biggest mistake we are making. Why I'm saying so? You need to give fund manager a time to, sometimes the strategy may not work the way it should work. Am I right? Because when a fund manager and I'm not a big fan of mutual fund, to be very honest with you, but I'm saying thinking from the point of a fund manager, because not all strategy will play out all the time. And hence, you should give minimum 3 to 5 years to the fund manager to play out his or her strategy. Now, if you are in a little rush to get out of it, I think it's a little mistake that investors are making. And if one thing I would request you to really improve on, I don't invest a single rupee in mutual funds, so let me put a disclaimer. I'm not a big fan because I believe they are not able to generate the alpha they should be able to generate. But since if you are investing in mutual fund, my request would be, if at all, please invest for that fund manager at least for 3 years. Don't be in a rush to come out within. And there's an interesting story, and Mohit was asking me in the afternoon, Sunil, what could be the reason why investors are basically getting out within 2 years? Is it because the performance is good, or is it performance is bad? And I must tell you, if the performance is not good, there is a hypothesis that you may still get out. if performance not good, then still you'll get out, and performance good. It is too good, you still want to lock in profits. I happened to meet one fund manager, the PMS fund manager, almost, I think, before COVID, if my memory serves me right, or maybe post-COVID, I'm not able to recollect exactly. And he said, Sunil, uska performance बहुत अच्छा किया. In a 1 year, his the PMS performance was up by 80% or so. तो बोला तेरे को तो बहुत पैसा आया होगा. बोलता है नहीं सुनील, पैसा सब चला गया. बोला वाई? बोलता है पीपल से अगर इतना अच्छा परफॉर्मेंस इस साल है तो नेक्स्ट ईयर थोड़ी इतना आने वाला है, मुझे लॉक इन करने दे. You know, so that's the kind of mentality we have. We have reasons to exit from mutual fund if it is not performing well, and we have reasons to exit from the mutual fund because it has done extremely well. So I think it's a classical, it's more of a human behavioral issue. That's right. And when Mohit asked me, "Sunil, hai kya wo data?" I said, "Sorry, Mohit, I don't have that data, but this could be the plausible reason that why." But if you have very interesting story to narrate of your, please put it down, and I'll request Amir to please pick up your question about why did you exit it within 2 years of mutual fund, or what other reason could be. That's the thing. And maybe if you have some on this one, okay, how long you have been holding your mutual fund, would love to have that insight also. Now coming to the very interesting, SEBI has been promoting that you should invest directly. Why? Because once you invest directly, you do save near about 100 bips to 125 bips in your expense ratio. And yet, 76% of the money that comes in the mutual fund continues to be regular. I mean, that means they do go through the advisor. Why? I think the most logical reasoning, and I can relate to it, and of course I'll also take Mohit's opinion here. Okay, why do the people basically, I think people do see a value in terms of advisors, what we call, if you are going for ETF, then you don't need advisor, so you can directly go for this one. But I think the advisor does play a role in terms of selecting which mutual fund scheme that you need to select. And I have seen the best and the worst could be chalk and cheese, in the sense the best performing mutual fund within that same category can give you 40% positive returns, and in the worst could be minus 20. Now to save that 100 bips or 125 bips, what we call expense ratio, you may end up choosing this one. So what could be your, like if you have to invest, if I don't invest in mutual funds, so I don't have any idea about it, but how do you go, do you invest in a mutual fund, number one, and number two, how you go about investing in case if you invest in?
So I don't invest in mutual funds on the equity side, but I have a large experience of advising clients on mutual funds in my previous assignment. So I'm not surprised at all, Sunil, with this particular set of data. First is the performance deviation, right? So, that is huge. As you rightly said, it can be positive 40%, it can be minus 20%, and you need somebody to tell you. You need somebody to rebalance your portfolio. You need somebody to actively look at how your returns are doing. And I think the second thing, which is the most important thing, is that people perceive mutual fund as a buy and hold strategy, that you start an SIP. Now, if you start an SIP, for example, and you're doing an SIP for 5 years, 7 years, 10 years, you typically do it in the same scheme, because wo paisa karta jata hai, and you're saying that, okay, my wealth is getting accumulated and all this stuff, right? So there is a very large notion, and which is a wrong notion, that how much rebalancing can put advantage to your portfolio. Rebalancing is as important as a stock rebalancing. When you start an infinity or a model portfolio, you typically take our advice to sell a particular stock, to buy another particular stock. And I think that is very, very important even in the mutual fund side, because if the mutual fund is a vehicle for long-term investing, mutual fund scheme is not. Mutual fund scheme is not, because the mutual fund product per se, equity product per se, is a long-term product, but the underlying is not long-term. The schemes are not long-term, and hence, this data can be construed in two different ways. Either people are doing something very wrong, or people are doing something very right. Mm-hmm. Either they are actively managing their portfolios, by saying that, I'm following an advisor and the advisor tells me to sell a particular scheme after a year or year and a half. Or if they are not, then in that particular case, if you're blindly moving from one fund to the other, it is going to be, from one vehicle to the other. But as I said, the product is long-term, the schemes are not. The schemes have to be monitored very aggressively, and that's where you need an advisor who can help you, look at your portfolio, balance your portfolio.
So
typical, I think, sorry, Sunil, one example, one funny incident that happened in the afternoon. We were shooting for the promo of this particular webinar that you must have seen, or if you're not, you can see it. And I asked Sunil a question, and please excuse the way it says that particular answer, but I asked him, I asked him in a race, what is more important, the horse or the jockey? Right? What is more important? Because for me, mutual fund is a horse. It is going to run, either little, with a higher pace or a lower pace, and jockey is the investor, which is you. So what is more important in any investing? Is it the vehicle? I know some investors in Markets Mojo who claim to have generated humongous returns by the same set of lists which the other investors have not been able to. So the horse is a solid horse, right? The horse of mutual fund is a solid horse. It depends on the behavior of the jockey. So that is the straight line question that I asked Sunil. What's your view, Sunil? I want you to say that word because it's lovely the way you say it.
So Mohit has a habit of embarrassing, So I think it's a very clear cut. The horse rider is more important than the horse itself. Okay, why it is important? Let me complete the answer, sir. Okay, the reason is very simple. See, it's very simple. If you look at the data, everyone has a data. Okay, it's not that. When some make good use of that data and come out with a beautiful investment thesis and make more money. Okay, while the other uses the same data and is not. The horse is like a data. आपका कितना भी अच्छा डेटा हो लेकिन आप उसको यूटिलाइज नहीं कर सकते हो तो उसका कोई फायदा नहीं है. So I think his horse rider is more important as compared to the horse. Mohit, I basically anyway, coming back to our future trend.
You've taken the fun away from us.
I know. So, okay, now this the sentiment I think is a very, very, sometimes we overreact to everything in life, and especially on the geopolitical situation. And that's the reason I wanted to put this slide, for the very simple reason, because I wanted to tell investors how we should control our emotions in this one, because we do a lot of knee-jerk reactions on something. So very interestingly, if you look at it, what happened to the crude oil price? The hammer struck on 7th October to the Israel, am I right? But if you look at it, it was $87 per crude, this one. And now it's 87.90. So within 1 month, the price did move up to $94, and then it came down again back to the square one. What does it clearly says that कभी-कभी वो knee-jerk reactions होता है, we get little worried. A lot of people, you would also ask me what could happen to the crude, what could happen to the inflation, so on and so forth. But data right now clearly shows that it is started. Now, what does this crude oil price in a way suggest to us? See, sometimes you also need to understand the data in a little different manner. Why? That means that fear factor seems to be going down. And the crude oil price is a classical example of that fear factor, because crude is a global commodity. Remember, it's not a local commodity. So what happens to the crude is and I'll give you another classical example of that, where the sentiment lies. In March 2020, the crude price went into negative, in the sense the seller has to pay the price to the buyer, and that shows the sentiment. So I think crude gives an idea about what is perceived in the global. So right now the crude price movement does give an indication that Israel-Hamas factor is a factor. We are not disputing on that, but I don't think it's a factor that's going to impact the sentiment so significantly to the market. That's what this data indicates. Coming back to where is the R word for US? If you remember, in beginning of 2023, R word definitely means recession. Nothing else, so don't make any different meaning to that. Okay, and everyone thought that US is going to do hard landing. Am I right? And experts after experts came and said that there is going to be hard landing in US economy. Why? Because of the inflation is moving up, rate of interest are going to go up, and there is going to be hard landing. And the reality, yesterday, the data came out. The third quarter, these numbers are annualized. So it came out with 4.9% GDP growth rate for the third quarter. Now, no one believed. If you would have asked 2 months back, anyone, will it be 4.9%? No one would have given that number. Or if you would ask in the beginning of January 2023, can US economy on an annualized basis can grow closer to 5%? Even if you would have asked 100 economists, not a single economist would have given answer yes. So sometimes the economy data can prove you wrong. There are various factors at play which can work, which not many economists are able to understand that. Now, having said that, I must also make one prediction here. You will not see these data numbers again, at least for next 1 year or 2 years, of 4.9% annualized GDP in the US economy. I think it's going to struggle because of higher inflation, higher rate of interest there, the mortgage rate, which I'm going to present in the next few slides, and it's going to have a tough time. And that's where there is no recession. Again, I must admit there is no recession here, and I think US economy will slow down. Recession means 2 negative quarters in a row, which we don't expect that to happen at least in next 6 to 9 months. In fact, it's showing a lot of resilience purely because of the retail. The consumers are spending a good amount of money. US and the India home loan rates. And I must tell you, Mohit, when I bought my house, I took 13%, Mohit, as rate of interest. And then it went to 16.5%.
16.5.
16.5.
Which year was this?
So this must be in 1995 or 95.
Right.
Okay, and it went to 16.5. And then, of course, I had taken a loan from HDFC. And there was a floating actually at that point of time. And every 3 months or 6 months, I can't recollect now what was this one, वो बोलता है EMI आपका बढ़ गया है, and बोला दे लो अभी क्या करेंगे, that's the thing. And eventually then I basically and they used to have some charges for switching from so and that's something
at
like
that time
that.
they used to, now they don't. Yeah.
Okay.
Yeah.
And I end up paying that the charges also. And today, even it says 8.6, but I did receive a phone call a couple of days back, 8.4%. So what is the rate that housing loan का आपको मिला है?
I have negotiated so hard that I am not allowed to disclose it.
Okay, ठीक है.
But I can tell you, just a simple question for all the investors. I want to do a webinar with you. I have analyzed home loans, mortgage loans in a very, very detailed fashion. If anybody is interested, please do write how to get the liability lesser on your home loans. There is a very detailed analysis that I've done, and the outcome is a very simple outcome. So if you guys are interested, please in the chat box do put it, and I'll conduct this webinar next week if I find interest in the investors. But
Good.
Sorry, Sunil, I can't disclose that because
No problem. Anyway,
yeah.
so 8.4 that I received, I will put 8.6. Now, if you look at it, in the US, in last 10, 11 years, the 30 years mortgage has moved up from 3.9 to 7.8. 100% jump हो गया. Am I right? दिख रहा है 3.9 से 7.8. But in India, it was 12.5, which came down to 8.6. And now there is a high probability, and I think 6 months back I did tweet also on my social media that there is a high probability that US will have a higher mortgage rate as compared to India.
Within next quarter.
Within next quarter.
Within next quarter.
So now this is the kind of, and some people ask us, where does the India growth kahan pe, why do we need a strong leadership and so on and so forth. This data does give an indication how well. See, there was one issue which everyone took it for granted in India, that inflation is going to be the higher in India, whether we like it or not. And I think somehow, and rupee will depreciate by 5 to 6% every year. These two hypotheses always been there, and वो आप आँख बंद करके बोल दो आपका सही हो जाएगा next year तक. क्यों? Which every year used to happen, and that trend has been broken very substantially. Why? Because rupee now doesn't depreciate by 5 to 6%. In India's inflation, in last 8 or 9 years, have remained very, very under control. There was a good job done by the central banks. I must give credit to all RBI governor who did a brilliant job in terms of doing that. Otherwise, things could have gone. And see, remember, the inflation is like taking away. It's like a dimmak है जो आपकी पैसे को खा रही है. आपको पता भी नहीं चल रहा है उसको. It's a silent killer. And once the inflation remains under control, it gives a lot of benefit because your purchasing power goes up, and so forth. That gives a lot of benefit to the this one.
So Sunil, the most amazing thing here is that even if 8.6 comes down to say 7.6, even if you have a floating rate that you've subscribed for, your rate may not come down.
Because
that is the trick. So that is the trick that I want to discuss with
you. So if you have taken the loan and then what you are saying?
If you have taken
fresh loan, then you'll come.
Yeah, fresh loan. But if you have taken the loan at 8.6, you've taken a floating rate. If you don't do one simple thing, and the current rate comes down to say 8.6, your floating rate will not come down.
Oh, acha. So Mohit, I think,
and I took the banks to the task. I met multiple banks and I said, तुम लोग मतलब ये बिल्कुल बेवकूफ बनाने का तरीका है लोगों को. And I said, I will take this task up to educate my set of investors at least, so that their 8.6 can come down to 7.6.
So Mohit, you should do this webinar.
Yeah, so
and even I would like to attend that.
I'll just check the interest level of all the investors, and I want to do this because it is a huge, huge loss for investors to not take the benefit of because you see the interest rates are at their peaks. It may go up, but at a certain point of time, it will keep reducing. So 8.6 has to come down once your repo starts correcting backwards a little. But there is another element in it, which if you don't keep track and you don't fill up one stupid form, you will keep paying 8.6.
Oh, okay.
Yeah. So that's a huge if there's interest, we'll discuss this.
I have a different opinion. I don't know whether Mohit has the same opinion or not. But I'm of the opinion that you should never repay your housing loan. Reason बहुत simple है. मेरा बहुत थोड़ा दिमाग थोड़ा उल्टा ही चलता है हर वक्त. Reason is very simple. If banks is giving you 8.6, 8.5, whatever the rate of interest, and if the equity market is going to give me 15, 16% return, why should I repay that loan? On the contrary, I'll use that money to multiply my wealth. In other words, because देखो housing loan पे इतना कम मिलता है because it's a secured against your home. दूसरा कोई पर्सनल लोन नहीं मिलता आपको 8 point something में. तो मैं तो एक ऐसे इसके खिलाफ हूँ कि इसको आपको कोई प्रीपे नहीं करना लोन. देते जाओ EMI में 20 साल 30 साल because the longer the period, yes, there is one fear that you always have कि if you are not able to pay EMI, but people do forget कि what you are paying EMI today, 20 years down the line, the value of that EMI would be much, much lower. Why? Because of the time value. I am not of the opinion that one should repay the home loan. जितना लंबा खींच सकते हो उसको खींचो because I'll give you simple logic. आपको दूसरा दिमाग में लगाने का नहीं. You have an arbitrage opportunity. Simple logic है. पैसा housing loan लिया है कोई बात. See, I'm not saying you should borrow करके पैसा लगाओ. That's what I'm not saying. If you have money, and yet, should you then take a housing loan or not? My answer is that do not liquidate your equity portfolio to buy a house. Why? You use that money, जो है उसका पैसा equity बना के रखो, and then take a housing loan. Why? Because even if you don't invest, किधर भी किसको दो नहीं. Even if you put in ETF, Nifty ETF also, वो 10-11-12% तो रिटर्न दे देगा आपको. यहाँ पे आपको 8%. You are still making 50% more as compared to. So never do that. That's what my opinion. Mohit may have a different opinion, but we'll take up this during question answer time. So let me run through very quickly now. Where does India stand in terms of inflation globally? I think these are the countries where inflation is in double digit as of October. Okay, Venezuela 318%. This is one country, which was one of the most successful country and look at the inflation. Lebanon 2, Argentina 138%, Syria, Sudan, Turkey 62% inflation. Can you imagine? They've been struggling to curtail inflation, and of course their finance minister did something very stupid thing at the behest of his president, that keep the interest rate lower and still will be able to curtail inflation. Now of late they started realizing that's not the right remedy to do that. Iran, Guyana, and this one. So these are the countries where even now inflation is very, very high. There are almost 38 countries which has a double-digit inflation, double-digit. But where does the India stand in global G20? India is at the midpoint, almost very closer to the what France is having, 4.9 France, India is 5. The most probably India's inflation will keep coming down despite onion prices are going up. So, but overall, I think India's trajectory will keep coming down for the inflation, and that's going to make consumption cycle much better. Why? Because once your inflation goes down, your ability to purchase goods and services goes up, and I think that's going to. And very soon, I think India should have. And see, if you remember, RBI has a goal of 2 to 4%. So suppose if we are at 4%, if other countries everything remains same, India would be the one in G20, maybe at the 6th number or so, below Canada or so, just below Canada or so. So I think that's what the trend that's going to emerge on the inflation front. India Inc.'s performance, fantastic performance, 34% growth, Y on Y, 10% growth, quarter on quarter. Now there's an interesting thing, and I want everyone to look at this data. This is the price graph of a Bitcoin. Bitcoin was 27,6,750. अभी आप बोलेंगे ये इक्विटी मार्केट से क्या लेना देना उसका भी लेना देना है. See, that's why I'm saying how you analyze data, how you interpret data is more critical, and you will remember my words in next 3 to 6 months when what I'm saying will come true. 26,757 say it went to 34,175. In other words, almost 30% jump in the month of October. Now what does this indicate? Bitcoin price going up. It indicates there is a risk-on strategy with the investors. And why risk-on strategy is good for the equity market? Because if there is a risk-on strategy, equity market will do well. If there is a risk-off strategy, equity market will not do well. Remember 2022? Did Bitcoin price move up? The answer is no. There was no risk-on strategy. Equity market moved down. Am I right? Risk-on. So that's why if there is a Bitcoin price going up, and that's one of the reasons why I'm bullish about equity market, because risk-on strategy is coming back. And if it is coming back, equity market should do well, whether we like it or not. GRM, I will just talk very quickly. GRM has come down drastically, and in fact once it moved about near about $20 per barrel, it came down to near about now $4 or something. Having said that, this will impact all refinery company margins. If you are expecting IOC, HPCL, BPCL, the numbers when they came, give the comment. Of course, Reliance declared the numbers. I could not put in my data because this came just now. I think they came out with 26-27% jump in the net profit Y on Y. But I don't know what their view on the GRM. We will come to know on the con call. But I think GRM looks like will remain a little soft. But by 2024 beginning, I think again it should go up. And I'll tell you some other day why it should go up. With this, very quickly, Sensex and Nifty both declined 2.4, 2.6. Mid cap outperformed large cap, but small cap was down by 3.43%. And another week where FI sold very heavily, almost 8,000 crore, and month to that is 20,356 crore. With this, I'll not take much of a time, just to remind what Mohit said at the beginning of the webinar. Exclusive offer only for those who are attending this webinar. Mojo subscription, and Mohit said Mojo 1, it will be renamed as Mojo Professional at a massive discount of 47%, 19,900 for 2 years plus 6 months extra. So even if you subscribe for 2 years, you get subscription for 30 months. This is a very limited period offer, only those who are attending this webinar. The link is available below the video. Please click that link, only then you will be able to avail this offer. If you go to the website, this offer will not be available. With this, let's open the floor for question answer. Lakshmi ji is saying, Mohit,
I exited my mutual fund holding to start model portfolio on HNI account. I was holding rupees 1.5 million in mutual funds. Right, sir?
if you ask me, it's a smart thing to do. I'm not a very big fan of mutual fund, despite we do have a mutual fund section, so I'll be very honest with you. But I will say what I believe is right, and I will not try to basically, what we call, say goody things. मुझे नहीं लगता कि म्यूचुअल फंड में पैसा रख के कोई फायदा होता है ना ज़्यादा. मोहित में भी डिफरेंट ओपिनियन ऑल टुगेदर, बट दे डोंट सी द डेटा सजेस्ट कि वो पैसा बनता नहीं ओवर ए लॉन्ग पीरियड ऑफ टाइम. इफ यू आर गुड, मे बी 1 or 2 years 3 years इट गिवन ए गुड रिटर्न्स, बट ओवरऑल लंबी रेस का घोड़ा नहीं लगता है मुझे. Okay, Siva Lingesh sir is asking, sir, I have a doubt. Suppose there is a correction in the stock and results are due in few days. Should I wait for the results, or I should add on more as there is a good correction? As currently there is a good correction over majority of the stocks and the results are also on due. What should be the wise step? So sir, my advice would be, say result season to every 3 months aane wali hai. I don't think you should be taking a decision based on that. First thing, your view on the Indian economy. What is your view on the Indian economy? What is your view on the Indian numbers? And then within that, what is your view on the company that you intend to invest in? If they are positive, तो फिर आपको पैसा डाल, because don't try to time the market. I'll tell you, many investors are trying to time the market. There is one classical example. I'll tell you in our PMS case. Market went down in 2 days. He wrote to us, अरे अभी तो मैं थोड़ा wait करूँगा. I don't think market will go up till January. Let me wait and watch. Now market today went up. If again it goes up on Monday, again this customer will write to us, no, I now want to invest in this one. So you cannot time the market, because market will not tell you कि बस मैंने bottom बना दिया है. You will know the bottom only after it has been formed. So if your view on the economy is good, if your view on the India Inc. numbers are good, and if you believe that company that you intend to invest, please go ahead and please buy that. Don't wait for the results to come out and then do that. Because sometimes if you think that I'll wait, and if the result is really good, आपको 10-15% ऊपर में लेना पड़ेगा वही counter. I'll give you a classical example. There's one company which we are holding, NBFCs and our PMS. That company came out with the numbers. The script was up by 9% today. अभी आप में guts होगा कि 9% ऊपर जाके लोगे आप. That's the thing. So that's why first you need to decide if your view on the sector is good, economy पे अच्छा view है, please go ahead and buy. Don't wait for the results to come. Vinit sir is asking, Mohit, would you like to take this?
Should I sell my bonds to keep some cash available to invest in the markets, Vinit? It all depends on your asset allocation. So I don't know how much of your exposure is towards debt, and what is the objective with which you had invested in these bonds, and are they short duration bonds, long duration bonds? So I think we need much more information on this to give a view. Because if you've decided that your asset allocation has to be 60-40, for example, towards equity, and if this is a component of 40, I would say why? Because you should also not get greedy and shake your asset allocation. But if you are under pitched on your asset allocation, which is, let's assume you decided your asset allocation to be 60-40, and you're currently only 30 or 40 in equity, I would definitely say go ahead and do that. So it really depends on your asset allocation situation and what your objectives are. Let's take the next question. Nifty Alpha 50 is continuously self-adjusting ETF, having 50 alpha generating stocks. How good is to invest on this one in SIP for the next 10 years?
I think it's a good strategy if you're not looking at the alpha, but just want to have a returns that is similar to the benchmark. I think you should go and do that actually. I think that's what I would suggest you that. See, if you remember, I did one study about should you invest in Nifty 50 or you should invest in Nifty 50 equal weight index. If you remember 2-3 months back, and when I look at the historical data, it did give me an indication that you should invest in Nifty 50 equal weight index, because over a longer period, because when Nifty 50 has a weightage based on the market cap. The highest market cap company will have higher weightage, of course, based on the free float also, and so forth. But in the equal weight index, every company will have an equal weight, and hence probability of that equal weight is doing outperforming better is much higher. So if you ask me, I would suggest you to do this SIP for 10 years with equal weight index.
Mr. Balaji is writing, hello, I feel upset looking at Mohit. I never got Markets Mojo t-shirt ever. Sir, I'm surprised because we had widely distributed the Markets Mojo t-shirts. I'm surprised you haven't got it. I think last year we even sent 2 Markets Mojo t-shirts. This must be a logistical error or something. Please write to support. I'm going to make sure that you get the Markets Mojo t-shirt.
Yes, next please. Mohit.
What will happen to existing Mojo professional members? Don't worry, sir. Existing Mojo professional members will continue to be the Mojo professional members, and they'll continue to get the new services that we are offering. So you don't have to worry out there. Just wait for another 3-4 days when we come out and do the announcement. I'm telling you, this is a radical shift that you will see, but we will never let the Mojo professional members be on the disbenefit side. Many people, dear Mohit, we always love to hear you on any subject. Please let me know on the date of the webinar you are going to conduct on the subject home loans and other loans. Absolutely, sir. Absolutely. So for all the people who are interested, I will do this webinar next week, and I will make sure that on Monday itself I put up on the site and send a special notification on when we are doing it. Most probably I should do it on Wednesday. If not Wednesday, then on Thursday. But either of these 2 days I would be doing it. But we'll post it on the webinar page on the site on Monday itself. I'm telling you, if you're a loan taker of any sorts, home loans or unsecured loans, personal loans, auto loans, whatever you are, you will benefit hugely. And it is just completely a hidden factor that I observed by talking to the bankers, being a banker myself in the past. It's at my wit's end that how investors can get taken for a ride for such a small and a stupid thing that all the investors can benefit. So this will be an eye-opener webinar, I can tell you, and I would expect maybe you should also join with your kids, because tomorrow they would also take a home loan sometime. So they should understand how the home loans work, how the loans work, so that they understand that, you saving 1-2% in a year on a compounding basis can do what kind of a magic. So please make sure, and this is, as I said, a very simple phenomena. So when you are joining in, please make sure that you request your siblings also to join, and people that you know who've taken loans also to join. You can send the invite to them also, and let everybody join and benefit from this. I think this is more of a socio-economic activity that we do to each other to make sure that we just don't keep paying something that we are not due to pay.
Mohit sir, Diwali gift chahiye.
This Diwali, best Diwali gift for retail investor will be Markets Mojo launches very aggressive model portfolio so that we can get higher returns. Markets Mojo members are waiting for this best Diwali gift, gift this Diwali of very aggressive model portfolio. Please launch this product. Okay, so I have not worked on the very aggressive model portfolio, but trust me, the 2 products that I'm coming out with will even beat the performance of the very aggressive model portfolio. So when I show you the product and when we show you what it has done in the past, with our full disclaimers that that is not a guarantee for any future returns, but when we show you, you will realize that this is a very, very aggressive strategy that we are playing, and that is the reason I'm very excited to do this particular launch, because you will be surprised on a backward-looking Markets Mojo AI platform, data science platform. From there, we've come to now doing forecasting on companies that you might today find strong sell on the Markets Mojo platform. So without giving much away, just wait, and I think your query will be, sir, more than addressed in the launch that we're doing next week.
Sunil ji, in my view, maximum people and myself invest through advisory intermediary because of direct investment. You need to open various accounts with each mutual fund app and website. Whereas when I invest through ICICI Direct or HDFC, I can invest in any scheme through one window. Okay, so that's you are saying it's a operational it's better, and monitoring is better when invested through intermediary, as it can be sent through one place. You need to look at different portals and consider the manufacturer. So I think that's a fair point, and I must tell you that we also have that facility available where you can see all your mutual fund holding and their performance in a very concise and precise manner with lot of analytical tool available. But
Vikram Singh ji, आप इतना तकलीफ क्यों ले रहे हैं? Because you don't have to. You have sites like Grow and various other sites which give you a direct platform to invest through Grow. So like the way you're doing through HDFC Securities, there are advisors who typically give you the direct model. So you don't have to go to any of the sites directly. You invest through a distributor, through an advisor, which is like a Grow or anybody else. And in fact, Markets Mojo is offering that you through a direct platform itself. So I, as a house, tie up with all the AMCs in the capacity of a direct plan. So you don't have to go through any individual things. You just have to go through one of these guys. Like Grow is also another option. Various other options in the market. Where there is direct options enabled, and you have to go through that. You don't have to go through multiple AMCs anymore.
Will other bitcoins or other crypto will take place of reserve currency instead of USD? Looks a little difficult at this point of time, because I'm still trying to figure it out. What is a fundamental factors behind that Bitcoin? What is that? What is the reason why it should go up or go down? There is no fundamental reason, right? Just pure demand and supply that puts up or puts down the price of Bitcoins or cryptocurrency. There is no underlying assets that basically. And what is the guarantee? There is sovereignty. If US dollar, there is a US government that basically give you a guarantee to repay that amount, that what it stands for on the dollar note, all right? But in cryptocurrency or Bitcoin, there is nothing. So no central banks ever would like to put that money in this. So your question, will cryptocurrency can replace USD? Answer is clearly no. No, it will not happen. And can it replace gold also as a placement? My answer is again no. No, Mahesh ji, this gold reserve that I've talked about is only with the central banks. India का तो gold reserves बहुत ही बड़ा होगा, ये थोड़ी होगा 3,000-4,000 टन होगा इंडिया के, जो हर एक घर में.
आपका लॉकर वाला नहीं है सर,
ये लॉकर वाला नहीं है ये सर, ये सिर्फ गवर्नमेंट का ही है. And November is now collecting gold investment by individuals also. Yes, we are right that what we call as sovereign gold bond, but that doesn't fit right into the, because what we are saying, gold is a physical gold, not the gold through SGB. You're right. So he's saying 21,000 ton gold. Manish ji.
So no country can compete with India.
No one can compete there.
That's right.
India ka love for gold has been amazing. I'm not, every year I visit Tirumala somewhere in the month of October or November. And when I visit that, I see the people wearing gold when they come to temple also. It's so much, I cannot imagine, and they don't look so rich, but the amount of gold that wear, I think they लोग खाना शायद छोड़ देते होंगे, लेकिन gold definitely purchase कर. That's what my sense is, especially in the South India.
So with that, we would call an end to today's webinar. Thank you so much for joining in. As I said, next week, the how to crack the loan code is something that I would definitely cover up. It's my promise to you. We'll do it either on Wednesday or on Thursday. Please watch out the site and make sure that you get as many of your friends, your family members in it as possible, because we need to start a little bit of a small revolution out there to make sure that we are aware of what we are doing. Also, November is a big launch for us, and 19,999 for 2 years with 6 months is something that is going to disappear as an offer very soon, which is at a 47% discount. Make sure that you would have extended as many times as possible to take the long-term benefits of the Markets Mojo Professional and the upcoming Mojo 1 of Markets Mojo. With that note, good night and have a great weekend ahead, and stay safe.